another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol SOXL. My name is Chris, and today is Friday, July 11th. We're here to wrap up, or recap, I should say, the week and the price action in SOXL. One thing to remember is that this is not financial advice. I'm not a financial advisor. I'm just giving you my unedited view of the market, more specifically the movements of SOXL. As always, do your own research before making any trades or investing any money. Make sure you know your own tolerance, risk tolerance, and let's get into it. So just looking at it from the week perspective, I like to just pull out and look at everything from the week perspective at the end of the week, see how we ended the week in relation to the 2020 low to 2022 high, because that's where we've been trading for the last 3 years, right? Or 2.5 years. So if we zoom in a little bit on I guess before we zoom in, we can see we're still down, trying to break out of this bottom third of this range. There is a lot of chop here. It's not thin structure like it is up here or up here. From this range here, all through this range, you see that there's a lot of fighting, a lot of chop. So we're coming into chop, trying to get into this second third or halfway up through the range, but we're looking strong. The week finished off a little bit of a wick to the up on the top side, but it's not that big, so not too much to worry about. We've got a solid green body, a nice wick to the bottom, or to the downside, signaling that price did try to explore down there, but it wasn't being taken, and the price was pushed back up by the bulls. So we're getting ever closer to this year flip, trying to go from green to red on the year. As we can see in this upper left hand corner, we've got the time frame continuity, we've got the week, we've got the month, we've got the quarter, all green. We just need that year to flip green, and we'll have a lot more momentum and conviction behind the plays that we get into to the upside. So that's one thing that we're looking for. We're looking to also break this monthly downtrend line in this green dashed line here. If we flip to the month chart, zoom in a little bit, we can see where we come off the top of this candle here, then this candle here. We've got a nice downtrend line. You can see we tried to get close to it, at least after initially setting it, but price reacted negatively and got pushed back down by the bears, and that's where we went and saw that April low. But if we come back into the week view, we can see we've got a bunch of green candles in a row. Now that's also one thing to be a little bit cautious about. We've got 1, 2, 3, 4, 5, 6 straight weeks that are green. If we go back and look, there are not many times where we have 6 straight green weeks, right? We got 1, 2, 3, 4. I guess you can call that 4, 5, 6, 7. So we did get a 7th week there. So that's one. But when I went back and looked, I couldn't really find any other points where we had the 5 weeks in a row, other than in 2020 when the market really got going. A lot of not artificial money, but the government, pumped a lot of money into the economy, gave everybody checks, and a lot of that went into the market. And you can see how we had 1, 2, 3, 4, 5, 6. So that's 6 weeks as well. I thought I had counted one was 7, but no. So 6 is a pretty good number to get to before having some type of pullback. And you can see we pushed up against this weekly broadening here in this purple line. We did push through it to some extent, but we're right where this downtrend line and this weekly broadening are intersecting. So it's some pretty high resistance in my book. So, I didn't swing any puts over the weekend, but I am looking to see downward action possibly next week. It's options expiration week as well. I'm not saying that I'm, just going in straight on puts from open on Monday. If I was going to do that, I would have just swung puts over the weekend. We did have puts at the end of the day when we made the lower high on the 1 hour. We ended up exiting at the end of the day for basically break even. We had a small loss, but we took the trigger, but there's nothing out there yet saying that we're going to push down to a reasonable extent. So there's no reason that we need to swing puts over the weekend or just jump into puts on Monday unless there's some type of news over the weekend that comes out that negatively affects the market, or Monday, just for whatever reason we push down to like a gap down or something like that. If we look at the economic calendar, I'll try and bring it up here real quick. There is some economic data that will be released next week, so that those could be catalysts to the downside. However, those are just those are later in the week, I would say. So they're not Monday. If we look at next week, as a matter of fact, there's nothing reported on Monday. We've got CPI on Tuesday, a couple of Fed members speaking on Tuesday. We've got PPI on Wednesday, retail sales on Thursday, jobless claims on Thursday. So there are some possible catalysts to the downside next week, but they're not coming on Monday. So again, no reason to swing any puts over the weekend. No reason at this point to be jumping into puts at open on Monday. So although we're coming to resistance, there's always a chance that we can go two up on the week and make a failed two up. So we could go up and do an inverted hammer, come back down, and end the week back inside this candle, or even pull a three and do an engulfing candle. There's no telling what we might do, especially with those numbers coming out. But there's no reason to be bearish from Monday morning and the get go. So if we go back to, we'll go to the 15-minute and just get a closer look at price action for the day. Oops. Come on now. What's going on? Alright, so if we come in here, make this a little bigger because we've got a lot more Fibonacci's out here. So you can see we've got these Fibonacci extensions that we've been respecting over the past couple days, right? And then we've also got last week's high that's been being respected. That's why we're leaving them up here. This fib extension we did have to draw on Wednesday, I believe it was, this week, because we didn't really have anything for price, and we can see that yesterday it actually respected what we drew on Wednesday. So we know we're pretty much spot on with those levels. Some of those levels coincide with these fib extensions, so that's more confluence that this is a solid level. But we can see in the morning we did get that push down initially. We didn't jump into puts this morning like we did yesterday, and no, I don't think we did Wednesday, but yesterday morning we did. Wednesday we made money off of puts in the morning as well, but today we didn't. We opened down, and we immediately went to this overnight low, which coincided with the previous low a day. So I figured that would be probably some pretty good support, and I went ahead and broke actually a couple of rules. If I go down to the 5 minutes, right? So actually no, I didn't break any rules, because when it did break two up, once we marked this the bounce off of the overnight low and we went two up on this candle, I entered. It was right at the opening print, which is this price level 1, and we rode it up to, I believe up to here, yeah, because we went to the 27.29. We didn't break any rules on the way down, right? So we went up, we created a higher low, so that means we stayed in it. Created another higher low, we stayed in it. We didn't went down, made another. Oh no, this is, I actually remember tweeting about it at this time because we had set our sell stop at this 26.82 level, and literally $1 more premium, and it would have sold. I actually watched it, but it didn't sell, which is why it's good to make your stops not at the actual magnitude, but a little bit below the magnitude, especially with something like a scalp. If you're in there, a light, real light, as far as contracts go, you can kind of play with it a little bit more. And so that's what we did. We ended up not getting stopped out. It pushed up to this 27.29, which was our first target. We didn't get out there. We did want to try and reach this next target of overnight high, but we went down. We made a higher low here, but then we made a lower low, and then we had our stop just below this low, and this time it did hit. I don't know if it was spread or what really that got it, but it did hit this time, so we did get stopped out here. So we made a little bit of profit. We did add a contract, which I also tweeted about, because we actually went down here to the 1 minute, and there was I think I said at one point, oh yeah, once we resolved this opening print right here, you can see that we had like some pretty good action down here, a pretty good fight just below it. I was tempted to get another contract, which I did. So I said it, I tweeted out, if we get a higher low here on the 1 minute, I would add another contract. So we did get one. We sold both contracts though when we got stopped out, and on the lower high, lower low on the 5 minute, like I showed earlier here. And yeah, it ended up floating up to the overnight high. We do have contracts for July 25th and August 15th, as well as September, November, and January 26th and 27th. So there wasn't any real urgency to try and get back in here and get that other money there. We had our little quote unquote fix for the day because it wasn't a strong trending day, right? It was just a slow climb. Like I said last week, I don't really like to trade heavy on Fridays. A lot of the time, in my opinion, there's like one, maybe two moves earlier in the morning, and then a lot of times on Fridays it just kind of peters out, goes sideways, or is just a slow grind to the upside, which is fine because once again we have longer swings, and those we're able to kind of gain some money back from the drop that it took in the morning, and so they're still in good position. And that didn't have too much trading going on today. If you follow our Twitter account at Bullish Chips on Twitter, or I guess it's called X now, you can see us tweeting live as to the plays that we're getting in and out of, and why we're getting in and out of them. So it's all backed up by our system, the method that we've come up with to trade here, and it's shown successful. Again, today wasn't a huge day as far as profit is concerned, but it was profit, so it continues moving the portfolio higher as far as the amount of cash that we have in there. And like I said, we can just continue to watch the swings that we're already in kind of count up, and all we're doing during the day, other than maybe getting some scalps or day trades in here and there. Once again, you don't need a million trades, but if you get some scalps in here and there in between, sometimes those scalps end up rolling into day trades, which turn up into big days. But for the most part, what we're doing is just protecting against the swings that we have, right? Just making sure the price action is doing what we want it to do, right? It doesn't. We're not saying we know what it's going to do, but we're just making sure it's continuing to go in the right direction and not triggering any actionable signals to tell us to either get out of swings or to buy puts to hedge against the swings that we do have. So all in all, a good day, no complaints. Let's see, let's bring it back out here, get off of the scalper chart and just look at this 4 hour perspective. So we did get the 1 2 down 2 up trigger. It just didn't complete, right? So we just got to see on Monday what it's going to do. Are we going to get a 2 2 continuation to the upside to complete this strat here? The target being the high of this 2, which is one candle to the left of the 1. The high is 27.73. If it does, it's once again getting us that much closer to the week flip. This orange dashed line right here is the daily uptrend. But this is from the end of June. You can see it's June 23rd to July 1st. So we're really trying to get back above it. You can see we rode it for a little while. Right? It started here. We went up, made a higher low here. This is a 4 hour chart, but on the day that was a higher low, and we kind of played with it for the next couple of days and only fell through it today. So I left it out there. We're still kind of right by it, but we do have this more recent day trend uptrend line from July 1st to July 7th right here. So we do still have room to pull back and still be able to be within this uptrend that it's in currently. Again, I'm not a huge uptrend downtrend line person, but I do like to have them out there to see if they show confluence with any horizontal levels that I do put a lot of weight in. So looking good there. We had a pretty good week, all in all, from swings to scalps to day trades. We're continuing to move up every day. We have a couple of losses, but they are very, very minute losses, so close to break even. It's funny sometimes. I ask myself, why don't I just put it at break even? What's a few more dollars here and there of trying to stay in a play. If it's not working, it's not working. Which, if you're already taking very small losses, you have some wiggle room to work with that, and that's what we do. We make sure that anytime we enter a contract, we know our entry, we know our exit, we know our stop loss, and the stop loss is never very large. I like to have 3-to-1 risk to reward ratio, or reward to risk ratio. So we're only risking 1R to get 3R. 2R, if you're still getting 1R risked and getting 2R reward, and you have a very high winning percentage, then you're still making very good money. So sometimes we do only get those 2R contracts, but when we're talking about scalps and day trades here, but with those longer swings, we're getting much more than 2R, and as long as you're doing that at a consistent pace, it's accomplishing the goal that I wanted to accomplish. You're making good money. So let's get in here, get our charts freshened up for next week. So let's remove the opening print. All right. And this will be really quick. Sometimes seems like a lot, but it's not. And let's go here. Let's move the high 50% and low of the week to this week, because this week will be next week. Oops, that was the wrong one. Don't do that. Trend line. Activate week Fibonacci. So there's that. So that just lets us know, especially when we're on the micro time frames and we don't have the ability to zoom out, or take time to zoom out, time that could be critical for a scalp. We can just tell already by the markings on the fib what is what. So if we take a look at this, we've got a solid purple line that we know, if we see a solid purple line and a horizontal purple line, that's the top of last week or last week's high. If we see a dashed purple horizontal line with the larger dashes, we know that's the 50%. And if we see horizontal short dashed purple line, we know that's last week's low. So everything is easy for you to understand without having to click around in a bunch of charts. You can really just keep a chart in one view and trade off of it. So let's go in here to the 4 hour and let's move our 4 hour markers. So here is previous high a day. We'll move that to here. And then the high of the second 4 hour candle of the day is there, so we'll move it there. And the low of the second 4 hour candle, we'll move that to there. And then the previous low a day, we will move that to here. All right, so very simple, very quick, very easy. Let's just do it again one more time, because we only do this on the micro charts. Activate. All right, just 2 more. All right, and again, this is so we can be in on a micro chart, a 5-minute chart if we need to be, and know exactly what these markings are, right? And these are critical points of inflection for price, right? Those mark where price stops or it starts in a lot of cases. So let's go to the, and let's see, I move all of the broadening formations throughout the day, so they should all be up to date. That's the, yeah, these are all up to date. I know they are. I move them every day. So very simple. Let's go ahead and remove the opening print mark for the week. All right, remove that. And remove that because we'll need to mark the opening print of next week, which also means we need to go in here to our notes and create some new notes. But we've got to Monday, July 14th. These notes are from the 11th. On Monday, there will be 127 trading days left. We closed at 27.29. And we're going to blank these out. Oops. This is the week of the 18th. Alright, so this will be 14 through 18. This will be the 18th. We won't know the expected move for Friday until Thursday night, but we are going to know the expected move for this week, this coming week, which is what we'll get now, right? So we go back out here to the options chain, and you can see the expected move for SOXL for next week is 2.63. We'll call it 2.63. All right. Oops. Let me get my pen out. 2.63, right? So if we go back here to our notes, so if 27.29, oops, 27.29 plus 2.63 is 4.92. Wait, that's not what we want. 27.29 plus 2.63 is 29.92. All right, 27.29 minus 2.63 is 24.66. All right, so let's go back out here to our chart. Edit this. We'll move it up a week. And our low, let's just copy and paste this. It's here for now. Make it easy for us. Alright, and just like that, we moved our expected move for the week. So you can see If the expected open is about here, we've got 50% to the upside, 50% to the downside. That's our expected move. And it's curious, the expected move goes down to this last week's low, and then basically up to the 138.2 fib extension of this move that we marked out. Let's see if we can highlight it, right? So this move from this basically 100% retracement of this bounce, this push back up to here, and then the pullback that we had that day, the fib extensions are here, right? And that lines up with the 138.2, basically 150, right? So those all kind of jive. Those all kind of make me feel better about the horizontal levels that we have. So, we'll just go out here to our other chart. And I move that out a week. Let's put this here and put this one here. Get these back out of there, and just like that, we moved our expected move. So just one more for the swing chart. Move this up a week. Oops. And this one I accidentally left in last week. So let's just do this. And we'll take that out of there. And our expected move for the week has been moved, right? So the only thing left we have to do here is get in and we're already on the 4. We need to go to this chart, and let's map out our targets on the 4 hour so that we can have the also map them out on the day, right? So starting Monday, there's the opportunity to go 2 up, 2 down. So the trigger would be the low of this candle, which is 27.11. All right, and this is going to be 2 up, 2 down, and the magnitude is the low of this previous 2, so that's 26.55. All right. And we can have a lower target of, that would be like a 1, combo 2 up, combo 2 down. I'd say the first target would be last week's 50%, which is 26.17. And then the magnitude of the 1, 2 up, 2 down, which would be the bottom of this 3, which is 25.89. 25.89, which lines up with the previous lower low. So we've got our markings to the downside with our target, our triggers, magnitudes, and then extended targets. Let's go ahead and two up, 2 up. So because it's not a reversal, there's not going to be a magnitude. There will only be a trigger and targets. So the trigger would be, actually, you know what? That's a 1, 2 down, combo 2 up. So let's leave that in. That way we have a magnitude, a real target to shoot for. Oops. All right. So that would put our magnitude. The trigger here is 27.54. All right. And the magnitude would be the high of this 2, which is 27.73. All right. So then our targets, we'll leave those that are out there because those are still relevant, right? So the magnitude of the 4 hour is the trigger for the day. Let's go out here, and this would be a 2 up, combo 2 down. This would really be a combo 2 up, combo 2 down. This basically reached magnitude. Actually, it did, because it's a 2 down. So that went 2 up, 2 down. It has not reached magnitude. So the trigger is going to be what we already have for the day, and low is 25.89. So remember, this magnitude turns into the trigger. which then we can mark down the low of this candle, which again is 25.89, which coincides with the lower low on the 4 hour. So we're looking good there. And we can leave our targets as well. On the day, we would be looking at a failed 2 down, 2 up. So our trigger would be the high, which is 27.54. All right. And the magnitude would be 27.73, right? That's the high of this candle. So magnitude 27.73. We'll just take this from here, right? Make it easy for ourselves, and then we'll leave our targets out there as well. So now what we do need to go in, normally we only have to adjust the 4 hour in the day, but because it's the end of the week, let's go ahead and adjust our week triggers as well. So let's get in on the week. Let's go to our swing trade. Now let's go to our, there we go, a cleaner chart here. And just looking at things from the week perspective. Again, 1, 2, 3, 4, 5, 6 weeks we pushed up. So let's just keep an eye on that. So the trigger to the downside would be the low of this week that we just went through, which is 24.62. And this would be a 2 up, 2 down. And what we said it was 24.62, right? Yeah, 24.62 is the trigger. 62. Magnitude would be the low of this candle, which is 23.58. 23.58. And then our next target probably be the top of this gap, which is 22.63. Then the bottom of the gap, 21.98. And we'll give one more, which would be since this would be a 3, that we'll do this, the bottom of the 3, 2028. Right? And you got to remember with SOXL, it's not, big percentage moves don't necessarily equal big dollar moves, right? So, being down, let's see, let's go to the chart here and we can see, 27.29 to 27.13. That's what, 16 cents. That's 0.6 down, is down 0.6%, right? So like 13 cents is almost down 1%. So that's why on these magnitudes and targets, they're not necessarily huge moves, but you're still going to get good money from the moves because of the delta theta and the price of the contracts, right? The delta is very high. The delta theta ratio is very high, delta to very low theta, and the price of the contracts are small. So you should be out there buying 3, 4, 5 contracts at a time, especially for swings that you're gonna hold for like 3, 4, 5 days at a time, maybe, or even longer. If you're gonna go longer than like holding them for a week, so maybe get 10 contracts, 15 contracts, which compared to the delta theta that you're going to get on something like, let's just look at another triple leveraged ETF, TQQQ, or is that TQQQ, right? So that is triple leveraged QQQ ETF, right? That your theta on those contracts is much higher. I do trade TQQ contracts, and I just simply end up buying less of them. They're a little bit more expensive premium, but which you get more dollar movement per percent, compared to a cheaper contract. So you don't need as big a percentage move to make good money off of them, but and you do get good delta as well on those contracts, but the theta is much higher. So if a move starts going in your direction, but starts to stall out, you're not going to get hit for as hard for holding it overnight, right? Because it's not like the your position was going against you and you needed to sell anyway. It's just it's moving in the direction that you want it to move in, but going slower than you expect. Sometimes contract movements go like that. They take longer than you expect. So it's nice to be able to have real cheap data to hold overnight. Now, uh, again, I'll get back to SOXL because that's what this channel is about, is SOXL. But just keep that in mind when you're trading other ticker symbols. I do trade other ticker symbols, but this channel is just about SOXL. And for the delta theta ratio and the premium per contract, it's hard to beat SOXL in that respect. So, and then at the same time, right? These are kind of smaller moves. They're just inching up. You do get bigger moves in SOXL, which is one of the reasons why I love to trade them, especially these big drops, right? Because when you see a second lower high on the day chart, and you see a gap down, and you get in, right at the gap down, or just after the gap down, after it retests the gap and rejects or something like that, you get all of this movement, right? All of that on the way up. Look at these moves. A lot of those moves are some pretty big candles in comparison to these little things. These candles are big moves, right? And that's not 2020, right? That's 2024, right? 2020, yeah, we got some huge moves because of that money that was interjected. In 2022 were some huge moves to the downside. Really just overall big weeks, right? Till things calm down. But SOXL can have some big weeks, big week, 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 big week. So these are relatively small weeks, and just even with the price movement we're getting on these, we're making good money, right? So let's just try and keep everything in perspective. Again, SOXL shouldn't be your whole portfolio, so I'm hoping I'm just giving a window into how to trade SOXL itself. What else do we need to do? So we've got our week's expected moves. Oh, we're trying to get our triggers and magnitudes for the week, right? So we marked them off. We've got them for the downside. Let's go here. This would be, we'll just call it a straight 2 up at this point. We're past the 3. We're 2 candles past the 3. Oops. And alright, so we'll unbold it because we haven't triggered it yet. But the trigger would be the high 27.73 was the high for this week. 73. And our first target would be this 30.55. Right? Okay. So after 30.55, we'd be looking at the higher high on the week, which is 32.64. That would be our next target. All right. And after that, we're looking at the 35.43. 35.43. Right. So if we would have got to 35.43, that would have been a almost $8 move. That would be huge for SOXL. It would be like a 20% move in a week. So we've got, we're still looking good. We're still two up on the quarter and on the month. We haven't hit magnitude yet. So we've still got room to go. Again, we've had 6 weeks in a row of green action. Don't be surprised if we get some downside action. We got a gap right here. Not saying we're going to go fill the gap. Not saying that at all. But, we got a gap. We've got last year's low right here. We got the week and quarter flip. Those could all be retested. We've only broke through them. And then on shorter time frames, tested it with this wick. From a week perspective, it hasn't been tested. This quarter month flip or last year's low, right? Or even last month's 50%. Those can all be tested, and especially if price action gets back within this three. We all know that once a three is breached to one side and price action gets back inside it, more often than not, it wants to go breach the other side. So if we do get downside action, let's watch that 4 hour. Let's watch that day, and try and make sure we're getting ahead of any downside, or not ahead of any downside action, but seeing any downside action coming. That way we can start to, slowly scale into some puts, with some longer, extension, expiration points. A month out, 2 months out, really, so that we can kind of take our time and ride these down, if we are going to take a ride down. So another good week of trading. You know, Consistency is where it's at. We have a plan. We have a method. I hope it's helping anybody out there. If you have any comments for me, things that you like about the video, things you don't like, things about the method that I like, if you're skeptical of something, if you have, I don't know, if you want to challenge my method of trading in any way, I'm open to it. Let's respectfully have a conversation. But other than that, just make sure you do the YouTube stuff, like, comment, subscribe. Follow us on Twitter at Bullish Chips. It's in the description of the video. But yeah, stay up to date with us, and stay know about our trades throughout the day, by following us on Twitter, or X, I should say. And everybody go out there and just enjoy your weekend. I hope you had a good week of trading as well. Let's relax. Let's put our minds on something else. Let's enjoy some time with family if you're able to do that. Maybe do some work on yourself, mentally, physically, emotionally, and any type of building on the person you are already, in a positive manner is something great. So I hope everybody just enjoys the weekend. Much love to everybody out there, and I look forward to trading next week. Bye.